The market recovers from the day's low led by metals and the auto sector. IT, energy remain key drags. Stocks of city gas distributors slump after nodal agency GAIL cuts gas allocation by 20%. This is expected to lead to significantly higher gas sourcing costs for distributors. The Honasa consumer stock slips below its IPO price after a decline in sales led to losses in September quarter. The disruption following its distributor's model change is the key factor behind the weak show. China's move to withdraw the tax rebate on exports of aluminium and copper from December 1st boosts prices of the metals and powers up stocks of Indian aluminium majors. Grab for measures implemented in New Delhi as air quality deteriorates to severe category. Flight and aviation service hit as a blanket of smog affects visibility. Construction projects have been halted while the government has urged offices to maintain 50% workforce policy. Hello, good afternoon. You're watching Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at the market because it seems like a good afternoon, surely pacing up right now for the markets. Recovered from the day's lowest point, like you can see. We're seeing as of now, it was in the green. Slight bit of a fall again, and as of now, Nifty is seeing a decline of almost 0.1% in trade. Nifty Bank, let's pull that up because that's holding on to some bit of a green at one point of time. It's seen a sharp run up. As of now, a Nifty Bank also seems like is holding on to that positive side, so keeping an eye out on the Nifty Bank, holding on to gains of 0.4%. Mid and small cap, that seems like a bit of an outperformance was coming in from the mid and small cap, and as of now, Nifty mid cap holding on to 0.2% of gain, small cap also holding on to some bit of a negative bias, flip-flopping between the red and the green. A lot of movers in trade on the individual front. We have metals obviously leading the pack in terms of sectors, while IT the top laggard in terms of a top sectoral loser, and HDFC Bank, M&M, Hindalco, L&T, SBI among top gainers, while Infosys, TCS, Wipro among top losers coming in for the Nifty 50. But that's how we are looking at in terms of the markets as of now, a bit of a recovery. But what is also in focus, and let's begin the show by talking about the city gas distributors, IGL, MGL, Gujarat Gas. These stocks are seeing a bit of a pressure coming in. And what has happened is that the government has lowered the APM gas allocation for the second straight month. What does this mean for these companies? Why are we seeing this fall coming in? Sonal is joining in with us to talk to us about that. Good afternoon, Sonal.
Well, yes, it's a big cut that we're seeing across the city gas distribution space. It is the second month in a row that the government has gone ahead. They've cut APM gas allocation by 20% for these companies. Now, what does that mean? In terms of allocation, it has been cut to around 40 to 45% versus 70% levels that we had seen earlier. Now, APM is the domestic gas, which is the administered price mechanism, which was around 154% back in FY21. Then it came down to levels of 100%, then FY23 at 90%, and now it's at 40 to 45%. That means in their gas sourcing now, they will have to use other gases, HPHT, there is spot LNG, there is gas from new fields, which is priced at a level higher than the APM gas pricing, which is at $6.50 per MMBTU right now. That would mean the raw material prices for these companies would go higher because now 50% of their gas sourcing will have to come in at market-linked prices, which would be higher than APM gas, which was capped at $6.50. Now, what would this mean? The companies will have to go ahead and do price hikes in order to maintain their margins. How much price hike is needed? Around 10% according to calculations. Now, that's a steep price hike. Will these companies be able to take such a steep price hike? Maybe not, because analysts believe that there are a lot of state elections which will limit their ability to increase prices going forward. This will impact their margins, and that's why this big cut that we are seeing. In fact, Jefferies goes on to say that they bake in no APM gas allocation by calendar year 2025, and that would be a big dampener. They have lowered their EPS estimates for all these three stocks by anywhere between 19 to 31%. They have cut the targets and ratings as well on Mahanagar Gas and IGL. JP Morgan has downgraded MGL and IGL. It has cut target prices on both, for MGL to 1300, for IGL to 343 rupees a share. And CLSA says that if they do not go ahead and take any price hikes, that would mean an EBITDA impact of 30 to 35% or 45% in fact in some cases. That would be a big hit definitely. And that uncertainty over policy, what happens next, is something which is leading to that pressure on the stocks today.
Okay, thank you so much for that, Sonal. But to discuss gas allocation cuts further, A.K. Tiwari, member of the Petroleum and Natural Gas Regulator PNGRB, will be joining us today at 1:45 p.m. So don't go anywhere and stay tuned in for that conversation. But let's move on. And Honasa Consumer, that's another stock that's in focus today. It's locked in lower circuit. Numbers didn't seem that exciting. It's below that IPO price, opening price as well. Now, what impacted the numbers of the company? Let's go across to Mangalam, who's here to give us those details.
Well, if you look at Honasa's, stock price, it is down 20% and locked at lower circuit with pending sell orders as well. So fair to say there is no glow for Mamaearth this time around. If you look at the stock price as well, it is below its issue price. And if you look at, the entire stock price move from its highs post-listing. Remember, same time around last year was when we saw the listing of Mamaearth. From its 52-week high, the stock is nearly halved, 45% decline after a 20% fall today as well. For those, I jog their memory, the issue price was around 324 rupees itself. What was it that led to the weakness this time around? Let's go across to the numbers itself. There was a revenue decline, EBITDA decline, as well as the net profit loss. And that was on account of two engines of the company that failed to propel this time around. One, there was disruption due to distribution model change. Remember, the company had called that out in the previous quarter itself, but this time around the number was slightly higher than what the company had anticipated. Secondly, and the bigger reason, is Mamaearth itself, the mother brand, is growing slower than expectations. So as a result of which, if you look at the reported numbers for Mamaearth, the revenues are down by almost 7%. The EBITDA from a gain of 40 crores has gone into a loss of 31 crores. And on the bottom line, the company is reporting an 18 crore loss versus a profit of 29 crores. And that has impacted some of their other parameters as well. One of the levers for margin improvement would be ad spends as a percentage of sales, but decline in revenue meant that the ad spends also have increased by almost 500 basis points as a percentage of sales, and gross margins have stayed stable at around 68-69% itself. Their other brands grew by about 30%, in the first half of this year, and they are targeting improvement out there, but other brands just account for 30% of their overall sales. The problem is Mamaearth itself. What is it that is causing the worry for Mamaearth? Now, if you go to any of your beauty stores or speak to anyone who buys a lot of these beauty products, they would know that the wave of consumer preference has moved towards active ingredient-based products and not just natural products. So you have products with niacinamide, hyaluronic acid, peptide, etc. selling on the market. So that's against the positioning of Mamaearth itself. Secondly, the company needs investment allocation which haven't evolved for offline-based brands. So that is something that needs a bit of a reset. And the third most important thing that we need to watch out for is the brand mix across product, price, and communication. So basically, it's time for a bit of a reset. How much time will this and the other thing take? The management says that as far as the distribution is concerned, offtake scale-up of new distributors would take 2 to 3 more quarters as well. Now, this at a time when the street was paying a premium for growth for Mamaearth, which was over and above the industry. At least 2x as promised by Varun Alagh has not come by, and now the street is resetting its expectations until the company goes ahead and does better on either of the two fronts, which is improved distribution offtake or comes up with a strategy for Mamaearth itself. Until that happens, maybe all bets are off, and that's what brokerages are saying, and that explains the weakness in Mamaearth. What will be interesting to see is whether this weakness sustains until there is improvement or not.
Okay, thank you so much for that, Mangalam. But on that note, we'll slip into a very short break. And after the break, we'll return and we'll get to some of the key takeaways from the important speakers at the CNBC-TV18's Global Leadership Summit. So stay tuned in. Thanks for staying tuned into Business Lunch on CNBC TV18. And CNBC TV18's Global Leadership Summit saw ministers, policymakers and who's who of India, Inc. and financial markets in attendance at the landmark event. At the summit, Infosys founder N.R. Narayan Murthy spoke to on the need for more jobs and a shift in Indian mindset. Listen in.
The need of the day for us is to focus on job creation. Primarily low-tech job creation, because most of these people who are on ration or people, they cannot take up jobs in the software industry or whatever it is. So the focus has to be on low-tech job creation. And number two, given that the disposable income of India is rather low, therefore, we have to focus on exports.
And more from the summit, Swiggy CEO Sri Harsha Majeti spoke about how meeting consumer expectations was one of the top priorities for the company. He also discussed the challenges he faced as a founder. Listen in.
One thing that maybe now we've learned even more is their expectations just keep expanding. They just keep going higher and higher. And now we're starting to look at consumers wanting things in 10 minutes, but now it's also wanting a lot more things in 10 minutes. And maybe even like wanting their food in 10 minutes. So consumer expectations just tend to keep expanding. That's the one constant. Almost everything that can fit in a reasonably sized vehicle near you
will be shipped in 10 minutes.
Should be shipped. I mean, I don't know about 10 minutes. I think we will see some iterations on the operating model that you can't get millions of things in 10 minutes. My challenge as a founder, building in all of these businesses, super competitive, can be cutthroat sometimes. But the most challenging is to take as many people along as you can.
And Kapil Makhija, who's the MD and CEO at Unicommerce eSolutions, says that the IPO gave them validation to build a SaaS company that's a SaaS company for the India ecosystem, make it a large-scale company as well. Listen in to what more he had to say.
It was a great validation that you can build a SaaS company in India for Indian ecosystem and actually grow this to a large scale. In fact, our vision is to become a one-stop shop for e-commerce enablement. And in line with that, we've also recently acquired just this week a company called Shipway, which also gives us capabilities across the entire e-commerce value chain. So beyond just order, inventory management, warehouse management, we can now do courier aggregation, marketing automation. So it becomes a one-stop shop solution for all e-commerce brands and sellers.
And at the summit, the founder of Cred, Kunal Shah, also discussed startups and new wave of wealth sharing as these startups go public. Take a listen.
While we see all these startups listing, the one unique thing that is different than what it was before, for the first time, we see wealth sharing happening at the scale that last time we saw this was Infosys, where employees made a lot of money, but now we are entering a time where a large percentage of employees of these companies that are getting listed are getting wealthy. And for the first time, we are moving away from just pay me salary and be happy, and to moving into the stock. And that's going to create a new wave, in my view, because I've never seen a lot of people from startup joining these big companies, but I'm seeing a wave of all the execs now moving to this side, because now everybody has tasted the blood of stocks.
Okay, on that note, it's time for a short break, and on the other side of the break, we'll get you all the updates as the national capital chokes under a thick blanket of smog. Welcome back. You've tuned into Business Lunch on CNBC-TV18, and let's move on. Sources tell CNBC-TV18 that the Tata Group is looking to increase its iPhone manufacturing capacity with the acquisition of stake in Apple product manufacturer Pegatron. Ashmit is joining in with us with more details on this front. Ashmit, good afternoon, and what is the latest update on this?
Well, you put it there appropriately. Tata Electronics looking to expand its footprint, especially as far as Apple products, especially as far as iPhone manufacturing in India is concerned. Bear in mind, in October of 2023 is when Tata Electronics had acquired Wistron and its Hosur facility, responsible for manufacturing of Apple products. Now, we understand that Tata Electronics has inched closer and is on the verge of clocking a deal with Pegatron for taking over its facility, at least a majority stake of its facility as far as Chennai is concerned. We understand that the talks is in the neighborhood for a 60% stake change of hands from Pegatron to Tata. The concern that has been cited by Pegatron is that it is finding difficult to operate here as far as the Indian market is concerned, on thin margins with labor issues, and on the back of that is looking for a local partner. Tata Electronics stepping in there. Pegatron, of course, just to benefit of our viewers, has over 10,000 employees responsible for manufacturing over 5 million iPhone units per year. So that's a large plan that we're discussing. So clearly, Tata Electronics expanding its footprint.
Okay, Ashmit, just stay on with us. That's the update coming in on the Apple and Tata Electronics front. But there's a bit of a setback that's coming for Zydus Life as well, right? The Supreme Court has actually refused to grant them this interim relief that was there for the breast cancer drug. Could you update us more on that front?
Well, just for the benefit of our viewers, to give them some context, Zydus is locked in a dispute with the Swiss firm F. Hoffmann La Roche. The argument appears to be, the concern raised by the Swiss firm essentially is that there's a patent infringement for a breast cancer drug. There is the allegation is that there's a biosimilar that has been introduced by Zydus. Now, this dispute was ongoing before the Delhi High Court. Importantly, just a few days back, the Delhi High Court had passed an order, had granted an injunction restraining Zydus from either manufacturing or sale of this cancer drug. It is in appeal to that Delhi High Court order that Zydus had moved the apex court. However, after brief hearings this morning, we find that the Supreme Court has decided to grant no relief from that Delhi High Court injunction. That injunction continues to be in force. There is a restraint on Zydus from manufacturing and sale of that breast cancer drug, despite Zydus claiming that this will benefit a vast number of millions of women in India. On the back of that, Supreme Court sending this matter to the Delhi High Court for final adjudication. Back to you.
Okay, Ashmit, thank you so much for that update coming in there. But let's move on and to some more news coming in from the national capital. Now, the region continues to choke under pressure because severe air pollution forcing the government's air quality control team to enforce strict measures with effect from today. Abhimanyu has been tracking this and he has more updates on that front. Abhimanyu?
The air quality index in the national capital has already reached severe plus levels. It has crossed 440, which has prompted the Centre for Air Quality Management in Delhi NCR to invoke the stage 4 of the graded response action plan. Decreased visibility in the national capital has prompted delays in air and rail transport. Around 28 trains have been delayed and 8 flights have been diverted. It remains to be seen whether any further action would also be initiated by the state governments as well as the central government to ensure that pollution levels are reduced in near future. However, stage 4 of GRAP would imply that there is a complete ban on all construction and demolition activities in Delhi NCR. Also, the Delhi government had earlier ordered physical closure of schools for classes 1st to 5th and had advised companies to allow their employees to work from home. It had also staggered timings for government employees to ensure minimum rush on the roads. Apart from that, the entry of trucks into Delhi NCR has also been curtailed, and only trucks carrying essential items would be allowed to enter the national capital. Also, there is a curb on the plying of BS3 petrol vehicles and BS4 diesel vehicles till further orders.
Okay, thank you so much for that update there. But let's move on to some national update more on that front. The northeastern state of Manipur is on a boil again. Violence has broken out in Imphal Valley after bodies of women and children were recovered recently. Mobs have targeted the residences of many legislators, including the Chief Minister and Biren Singh, and meanwhile, the National People's Party, with 7 lawmakers, has withdrawn its support to the BJP-led state government on the security front. The centre is likely to send more troops to control the worsening law and order situation in Manipur. And with that, it's a wrap on this edition of Business Lunch on CNBC TV 18. Thank you so much for tuning in. Don't go anywhere. You have Midcap Radar coming up next.